Let's get ready to mortgage. He is the prince of programs, guru of guidelines, master of matrices. He puts the fun in funding. Please welcome Mark, Mr. Mortgage, I tell.
All right. My name is Mark Eitel, and you are listening to the Mr. Mortgage Show. And you, my friends, are in the right place if you have questions and you want answers about real estate. Every week we do this right here, same time, same station, and it is our goal to give you the information, I mean the data, the real stuff, not the headlines, but we go way deep past the headlines and give you the data, the information, the tips, the tricks, the strategies that you need to make better real estate and mortgage decisions for you and your family. And man, oh man, was it a wild week in economic and real estate, and most specifically interest rate and mortgage news. Lots and lots of headlines swirling around out there. Big swings from the Federal Reserve, big rate increase. What is this going to do to housing? Is this finally the straw that breaks the camel's back? We've talked about it many, many times on the show. This housing market is like a piñata, and everybody's been taking swings at it. And some people are saying that we're seeing the first cracks in the piñata and maybe some candy's going to fall. So we're going to cover all that this week. We've got a really, really good show lined up for you. Dom, my producer, is in the studio with me. He mans the Anytime hotline, the email line also, as well as the text line. So if you have questions, you can call or text the Anytime hotline, which is 855-462-7292. Again, you can call or text that number, 855-462-7292. That is the Anytime hotline, and Dom will get your questions on the air. If you're old school and you prefer email, just go to mr.mortgage, never a .com. Just type in mr.mortgage. At the top of the page, there's a Contact Us box where you can fill out your question, hit submit, and Dom will catch that email here in the studio and get your question on the air. But hey, without further ado, let's dive right in. So to no one's surprise, we saw the Federal Reserve come out on on Wednesday and raise interest rates 0.75 of a point. And there was a shock sent to the market, right? Stocks went down big time in the afternoon session. And interest rates surprisingly held on Wednesday, but started to increase again Thursday morning. So it's interesting to see where we are. Interest rates are back up over 6. The good news is there's still a ton of opportunity in the market, and we're going to talk about some of that because we are still seeing some huge wins in the real estate market, and we'll call some of those out. But yeah, everybody's kind of trying to inhale and take a deep breath and try to figure out where we go from here interest rate wise. And there are just a lot of questions around what are interest rates going to do to the housing market. The Fed was pretty clear that he intends on raising until inflation gets back under 2%, which I think from where we are, there's a lot of work to be had to get there. But I do not have a crystal ball, but I've got a pretty good memory. And I do remember where we came from in this market. And we talked about it in the past. A lot of people are married to those super low interest rates because of the recency bias. And, a lot of people would like to hope rates go back down to the 2 or 3s before they make a move. But guys, I don't see that happening anytime soon. And we're going to talk a lot about that. We will get your questions on the air also. As I mentioned, Dom mans all of the hotlines, the email lines. He is on the lookout for your questions. I think some might already be pinging in because it was a pretty interesting week in economic and real estate news. But yeah, the Federal Reserve made that move. Surprisingly, I guess not surprisingly, because last week there were economic news around the CPI index that was released that caused the market to run up in anticipation of what the Fed was going to do. And I think that big jump in rates is kind of already baked into the cake because, as I mentioned, we're back over 6. The cool thing, if you will, or I guess it's not cool if you qualified last year for 3% and this year it's 6%. But a good thing is that historically 6% interest rates are still a significantly low interest rate by comparison to other investment and borrowing vehicles. And I know I sound like the old guy at the end of the bar at the VFW or at the breakfast counter that's saying, when I was young, interest rates were in the double digits. I'm not trying to be that guy by any means, but I like to paint everything with a brush of reality, and just, the 2 and 3% interest rates that that environment that we just came out of was not normal. And I don't think it's going to be duplicatable in our lifetime. If you think about what it took globally to stack up for that happening, I don't think any of us want to relive that, right? We talked about standing in line at the convenience store to buy a roll of toilet paper. Well, guys, that's that economic climate that we came out of, where everybody was shut down, sent home, couldn't go to work, PPP loans, additional unemployment benefits, and we thought the world was going to end. All of those policies around those decisions by all governments across the world is what set that environment up for the super low interest rates. So I believe they are a thing of the past. We can just look back at them like we do our abs and our hair from school now that we're all beer-bellied and bald, fondly looking back at a pleasant memory. And I guess, what's that old saying? It's better to have loved and lost than never loved at all. Maybe it's better to have seen 3% interest rates and, think of them fondly than to have never seen them at all. But all that being said, I share all that only because I don't think we're going back there anytime soon. And if you're holding out a decision based on that, I think you're just doing yourself a disservice. So I share all that only to encourage you to remain optimistic. There are still tons of opportunity in this housing market, and we're seeing it each week. We've talked about it many times on the show, and we'll dig into some details around the strategy using the seller's contribution to buy the interest rate down. That's a big, big win right now in this market, and we're seeing it every day. We've got 2 transactions. One's closing next week and one closed this week, and both of the clients got a significantly lower than market interest rate by simply asking the seller to contribute to a rate buy down. And the seller was willing to drop the price. So instead of dropping the price, they just wrote the contract in order to allow the buyer to take a portion of that and buy the rate down. And it works, guys. It works very, very well. Some people are thinking if rates dip back down, they'll refinance. That's always an option. But if you can buy a rate down now that you can love for a long time, you save yourself the cost of having to go through that refinance. So we'll dig into that. We're going to dig into some strategies around using an equity line versus a cash out refinance. And guys, if you have questions about that, please give us a call or send us a text, because I'm seeing it in my daily practice a lot where people have all of this newfound equity and they want to tap it to possibly buy another property, make investments, or what we're seeing a lot of people do with it is pay off credit cards and car payments, because the one thing that the Federal Reserve raising the rates does to all of us is it makes our credit card payments go up and any adjustable rate debt we have, because it's all based on that overnight rate, which controls prime, which controls adjustable rate debt. So all of that being said, there's a buzz, if you will, in the market around the idea of tapping some equity. And we can talk about the pros and cons of the different strategies to allow you to do that. If you'd like to dive deep into that, just give us a call or shoot us a text to 855-462-72. That is the Anytime Hotline. But we've got a great show lined up for you this week. I've got some data in front of me, and I know Dom is stacking a few questions up. Some have come in already. So I believe the natives may be restless. Are you seeing questions over there already, Dom?
I am.
It's going to be a busy week here at the Mr. Mortgage Show. But hey, we talked about all that Jim Beam last week. Dom, did you have a great weekend? Did you drink some Beam?
Oh yeah, for sure.
Good stuff. Yeah, that was a fun show last week. If you missed it, check out the replays at MrMortgageRadio.com. But yeah, we're going to dive into all of that this week, get to your questions, and so much more. You hear the music, you know what that means. That is the 2-minute warning. Actually, not the 2-minute warning. That is my cue. We'll be back in 2. We're going to jump into a very short break, but we'll be back in 2 minutes to dive into the data and take your questions.
Buying a home can be stressful. Willow Title Services will help you close the deal. Offering tailored services for your unique home buying needs, you'll have a single team member guide you from day one to the day you get your keys. They have a combined 50 years of experience, so trust the closing experts and contact them today. Visit WillowTitleServices.com. That's WillowTitleServices.com. Willow Title Services is rooted in experience to help you get to closing.
Here's another 5-star review.
My wife and I own a small business. And the way our accountant file our taxes, we don't show much income on tax returns. Because of this, it looks as if we don't make the money. This was a problem for our bank when we applied for a mortgage. But not for Mark. He verifies our income by using our monthly bank statements. Mark and his Mr. Mortgage team made a big difference for me. Yes, I am happy to recommend Mr. Mortgage Mark.
Hey, it's Mark Eitel, host of the Mr. Mortgage Show. You hear me all the time talking about the need to have the very best team representing you in a real estate transaction. And that starts with a really great agent. If you've got a great agent, that's awesome. But if you don't, check out www.reallyGreatAgents.com. There you'll find the best of the best, regardless of the city they work in or the brokerage they work for. www.reallyGreatAgents.com, www.reallyGreatAgents.com.
Are inflation and everyday expenses eating into your retirement income? Maybe you've considered a reverse mortgage and have unanswered questions like, do I still own my property? Can the bank kick me out? What happens when I die? Can I still leave my house to my kids? These are all great questions. Visit www.moreaboutreverse.com to learn more. That's www.moreaboutreverse.com. www.moreaboutreverse.com.
Welcome back to the Mr. Mortgage Show. Call us now at 855-462-7292.
All right, we are back. My name is Mark Eitel, and that's right, you are listening to the Mr. Mortgage Show, and you're in the right place if you've got real estate or mortgage questions. And if you have those questions, call or text the Anytime hotline, which is 855-462-7292. That is 855-462-7292. Dom is over there manning the board as well as the hotline. He's running around like a one-armed paper hanger back there, but he's making it happen. He's getting your questions to me. So 855-462-7292 is the Anytime hotline. Hey, guys, last week we were joking around a little bit about the women of Walmart, and I don't know how many of you caught that, but I heard some interesting comments during the week about last Saturday's show. But interestingly enough, it did prompt a conversation. So I don't know how many of you remember, but we're going to give away a Women of Walmart calendar to the person who's listening to us from the most remote location, or at least the furthest away from the studio. And that started a conversation with Heather Candela over at Willow Title. And you guys know how much I think about them as a company and her as an individual, and the importance of having a great title company involved in the transaction. I mean, goes without saying. It can really make or break a transaction, because what we do in the mortgage side and the agents do on the real estate side, we do all of this work and then we just kind of drop it on their desk. And it's up to them to sort it all out and make the transaction go smoothly at closing. So they do a great job with that. But here's where I'm going with the conversation. So Heather and I were talking during the week about an unrelated topic, and I started to joke about the women of Walmart and the listener from the most distant location, and she got a chuckle out of that, and that prompted a conversation about what is the location of a closing the furthest away from your office. That's what I asked her, because as you've heard me talk about, they've set up a completely mobile team to close their transactions all over the state of Florida. So if you're closing in Key West or in Tallahassee, she's got somebody that can come right to your office, to your house, whatever the case may be, to close the transaction. She told me she closed a transaction via an online notary with a U.S. citizen who was living in Brazil, and they were 11 hours away from the U.S. consulate, so they couldn't just send the package there, have the client sign at the consulate, which is pretty common when somebody's out of the country. So they set up an online closer, if you will, and it was pretty cool the way she described it. It's like a Zoom meeting. with eSign. So it was quite cool. But anyway, I share all that because it made me realize that unless we get a listener from Brazil, I might be sending her the calendar. But yeah, if you have title questions or you want to know more about remote closings or anything title related, check out Willow Title Services. You can find them at willowtitleservices.com or giving them a call at their office, which is 561-737-1630, but willowtitleservices.com, and you can ask Heather and her team about closing in Brazil. I thought that was fascinating. But anyway, you know what I do find fascinating also are your questions. So let me toss it over to Dom, and we'll get the question portion of the show rolling.
The first one we have is from Tammy. I want to cash out some equity to pay off my credit cards. What is the best type of mortgage for this?
Hey, Tammy, that could not be a better timed question because I was just alluding to that a bit earlier where we're talking with a lot of clients about strategies around that. And you hear me advertise the REC refinance, which is designed exactly for this, right? You roll all of your consumer debt that you want to pay off into the refinance, and then you hopefully walk away with just a single mortgage payment. And that REC refinance, REC, is an acronym for Reduce, Eliminate, and Consolidate Debt. And for a lot of people, that works, right? Because they can roll all of that into one payment, and it's often a much lower payment. The downside to that is now what may be a car payment with 3 or 4 years left is a 30-year mortgage payment. So over time, you pay a considerably larger amount of interest against that debt. Now, if you're a disciplined person and you're okay to manage your debt, a home equity line of credit is a great option because you can keep your first mortgage in place, assuming that you have a low interest rate, and a lot of people do, because the vast majority of people capitalized on low interest rates and refinance. So if you're in that camp and you've got a low rate, a home equity line will free up some of that equity so you can pay off those other consumer debts. And oftentimes they are interest only for the first 10 years. So it's a low minimum payment, but you can pay as much as you want against it. So you can put a strategy in place where you take those high interest rate credit cards and car notes and whatever you have, and take an equity line of credit and pay that off, and then aggressively pay down the equity line, because the last thing you want to do is keep that equity line, keep that debt on the equity line any longer than you would have by paying it down normally, because then it's counterintuitive to your goal. But an equity line of credit is a great option. If you're not disciplined and you're afraid you're just going to run yourself back up into a bunch of debt, then rolling it into a mortgage may be the way to go, because then you're guaranteed that, as long as you keep making that mortgage payment, you're going to pay it off. And even though rates are higher, you're going to have a lower monthly payment. But again, I just caution you, you're going to pay a lot more interest on those items over time. And what we're doing right now is we've got some equity management tools in-house that we can provide to you, and you can kind of sign online and pull the levers and see exactly what each strategy would do for you over the long haul. But yeah, right now an equity line of credit may be the way to go. If you have more questions around that and you want to talk specific strategy, I'd love to know more about what you've got going on as far as goals to pay down debt, and then what your strategy is to pay it down, whether it's an equity line or a cash out refinance. But definitely have that second phase of the plan in place where you're going to pay that debt down. So hopefully that helps. That's a great question. We're talking to a lot of people right now who've got a ton of newfound equity, and they're trying to think of the best way to use it. And hey guys, some people are putting equity lines on properties to use to buy other properties, because there are people who have a ton of equity in their house. I mean, several $100,000, and we've got equity lines that can go up to several $100,000 to $1 million, and you can access your equity for other opportunities. So I appreciate that question. Thank you for it. I'm going to toss it over to Dom for another question.
Leanne sent a text. Last year we decided to wait to buy. We thought the prices would come down. Now we have higher rates and higher prices. Do you have any advice? Hey,
Leanne, the only advice I have about that, and first of all, man, I I'm sorry to hear that, right? Because a lot of people are in the same boat. Somebody last year, right now at this time, was asking somebody in their life what they should do. And they said, re-sign your lease, prices are going to come down. Well, guess what, guys? That didn't happen. And by the most conservative estimates, we've seen, 14, 15, 16% appreciation. So if you were going to buy a $300,000 house last year, there's a very good chance that's a $340,000, $350,000 house this year. Well, that would have been your $50,000. So I heard it said a long time ago, and this isn't my my quote. It's from a friend of mine, Levi, who's a real estate agent in Dallas. He said one of his mentors shared with him that in real estate, oftentimes you make money by buying and waiting, not waiting to buy. So my advice would be look at your budget, look at what you can afford. If you can afford to make a move, maybe you humble your goals a little bit. Maybe it's not the 4-bedroom with the pool. Maybe it's a 2-2 townhouse because of where rates and prices have gone. But really, the sooner you get in, the better, because this train is still rolling forward. It's going slower, no question about it, but it's still moving forward. And if rates keep marching up, that's the double whammy, because if prices increase and rates go up, you see what that's doing to affordability. And you're the perfect example. If you were looking at properties last year, you were looking at properties with a much lower interest rate in mind and a much smaller, a lower price, if you will. So I've never seen waiting make a lot of sense because equity build is a long game. Flipping and, quick appreciation, that's the sexy side of it. But equity growth is usually a slow and long play. And don't forget, each month that you make that payment, you're paying principal down and you get the tax benefits of ownership. But hey, you hear the music, you know what that means. That's my cue. We will be back in 2. Sit tight. We'll come right back for more of your questions.
Buying your home is likely the biggest transaction you'll ever make. With stakes that high, you need certainty. Willow Title Services strives to take the stress away by providing a single point of contact with clear communication, resulting in a painless and positive experience. Willow Title Services has over 50 years in industry-leading and closing techniques, rooting them in the experience needed to get you to close. Call Willow Title Services at 561-737-1630 or online at willowtitleservices.com.
Here's another 5-star review.
We started our loan with a different company. They said we were approved, but at the last minute they told us there was a problem. I still don't know what went wrong, but thankfully our real estate agent told us about Mark. I was pretty stressed, but it's the perfect house, so we gave Mark a shot. He got it done. I'm not sure what was different, but I don't really care. We even got a better interest rate and with less money out of pocket than the first guy quoted us. It was a great surprise. Yes, I'm happy to recommend Mark and his Mr. Mortgage team.
Hey, it's Mark Eitel, host of the Mr. Mortgage Show. You hear me all the time talking about the need to have the very best team representing you in a real estate transaction. And that starts with a really great agent. If you've got a great agent, that's awesome. But if you don't, check out www.reallyGreatAgents.com. There you'll find the best of the best, regardless of the city they work in or the brokerage they work for. www.reallyGreatAgents.com. www.reallyGreatAgents.com.
Are inflation and everyday expenses eating into your retirement income? Maybe you've considered a reverse mortgage and have unanswered questions like, do I still own my property? Can the bank kick me out? What happens when I die? Can I still leave my house to my kids? These are all great questions. Visit www.moreaboutreverse.com to learn more. That's www.moreaboutreverse.com. www.moreaboutreverse.com.
Welcome back to the Mr. Mortgage Show. Call us now at 855-462-7292.
All right, we are back. My name is Mark Eitel, and this is the Mr. Mortgage Show. And we do this every week right here, same time, same bat channel, same bat time. Or I might have said that backwards, but you know what I mean. We're here every week. We're like the neighbor's dog that does a number 2 in your yard. You just can't get rid of us. We just keep coming back. I don't know why I went there with the neighbor's dog. We're not that guy. We don't leave that in your yard. We try to leave you with some positive information so you can go out there and make some good decisions. But hey, we've had a lot of good questions rolling in. I see Dom's jumping around back there. So I'm going to keep the questions rolling because that is my favorite part. So let me throw it over to Dom.
Jeremy sent in an email. My folks have run out of savings and live on just Social Security. I want to encourage them to look at a reverse mortgage. How do I get some information to share with them?
Hey, Jeremy, that is a great question. And I'm sorry to hear that your folks are in that position. And man, so many people are in that same boat right now. It's terrible. Let's turn that into the Love Boat, not the Titanic, though, by giving them some good info on how to work through this scenario. And I'm proud of you for reaching out because a lot of children do not want their parents to. That's actually not true. That's a misconception. A lot of children end up helping their parents, wishing that they would take a reverse mortgage so they don't have to keep writing that check. But just, you sent that in. I'll send you back some information. You can go to moreaboutreverse.com. That's moreaboutreverse.com. There's a very short video there, but at the end of the video, you can leave us your name and your email, and I'll send you back a package, an explainer, if you will. And then from there, we can jump on the phone and have a confidential conversation. You can come to my office. I can go to your place, and we can just sit down with your folks and walk them through the good, the bad, the ugly, because, a lot of people have questions. They're just scared of it, right? There's a lot of negative connotation around reverse mortgage, and rightfully so. They were abused in the past, but there have been rule changes made to protect the borrower, and it's like that old commercial. This is not your father's Buick. This is not your grandfather's reverse mortgage. And I'm not nearly as good looking as the actor that used to drive the Ferrari. I can't think of his name with the big mustache. Who? Magnum P.I.? Remember that? Dom's too young to remember Magnum P.I. Anyway, I know he does the commercials on TV for reverse mortgages. I'm not that good looking, but I will definitely give you my full attention and answer all your questions around that. But you started the ball rolling by asking for info, and we'll shoot it back to you, and then we can move at your pace if you have additional information that you require. So I appreciate that question, and we'll shoot you some info. Appreciate you. Hey, Dom, what else do we have?
Kai sent the text. If it's only supply and demand that controls prices, why does the government keep raising rates?
Hey, Kai, that's what everybody wants to know, right? Hey, that was Tom Selleck. That's the mustached man with the tiny shorts, the knee-high tube socks, and the Ferrari. That's who I'm not as handsome as. Anyway, to Kai's question. So, yes, supply and demand is the only thing that controls prices, the only thing. And that doesn't matter if interest rates are 1% or 100%. If more people want to buy than want to sell, prices go up. When more people want to sell than want to buy, prices go down. It's economics 101, and we've been talking about it for years. But to answer your question, the reason the Fed is raising the rates is he's trying to slow down demand. There's just not enough supply in the market. So the demand is overwhelming the supply. Well, they can't increase supply. The supply is the supply. The cost of money, if anything, it's reducing supply, and we'll talk about that. And actually, you know what? I'm going to jump on that now because it's a good point. But the Fed's attempting to quell demand. He wants to make it more expensive for you to buy things on your credit card, for you to buy a house, for you to buy whatever you're buying, because as soon as demand starts to cool, pricing will moderate. That's the theory, supply and demand. So the only thing he can do is fire hose demand with these higher rates to slow it down enough that the market will balance. And we're not just talking about housing, we're talking about everything. And you saw what supply and demand has done in fuel prices recently, because the only thing that's changed with fuel prices is demand. There's no more supply coming to the market. Demand has cooled. People have adjusted to the expense of fuel, and because of that, they're using less, and the price is coming back down. So supply and demand, Kai does control pricing, and the Fed is raising rates to try to slow demand down to get it closer to supply to balance the market. So I hope that helps. But here's where I'm going with higher rates could backfire on the supply side of things, because traditionally, people hold their house for like 5 years. I think the average is. And I'll dive through the data and post it up on the Facebook page. But guys, if everybody has refinanced in the last 2 years and is sitting on one of those trophy interest rates in the 2s or 3s, what is going to entice them to sell and move up? or move over or move down because the rates have doubled since they've refied. So, and housing has continued to appreciate. So a lot of people could not sell their house and buy it back today if they had to, because they wouldn't qualify at today's rates. So, or today's prices. So I say that only because a lot of people are counting on these high interest rates, slow demand down, balance the market, and then we'll see pricing moderate. Well, here's the thing. If nobody wants to sell a 2.5% or 3% mortgage that they have on their house and buy with a 6 or 6.5% mortgage, they're going to sit tight. That's less supply going to the market. You couple that with we're going into the winter months. Nationwide, building typically slows in the winter months because of snow on the ground. And then the third variable in this equation that few people are talking about are our seniors. A lot of supply comes to the market when the seniors want to move into assisted living or downsize. Well, that's not happening. We just had another question a moment ago regarding a reverse mortgage. Seniors are healthier than ever before. They're living longer than ever before, and they want to do it in their own home. They don't want to be cooped up in an assisted living because they don't need the assisted part of the living yet. They just want to focus on the living. So we've seen a big uptick in demand for the reverse mortgage product because it gives them access to the capital they need to live a happy, healthy life and never make another monthly mortgage payment. So all of those things are limiting supply. And I believe if rates keep marching up, it's going to have a reverse effect on the supply side because it's going to back people a lot into a corner, if you will, and they're not going to want to sell out of their 3% rate and buy into a 6% rate. That's, the musings of Mr. Mortgage. But that's what I believe is an alternative pressure point on supply that nobody seems to be talking about yet. So watch that in the future. But great question. I know it's super confusing. There are a lot of moving parts to the economics of our life that we rarely pay attention to until we're in these circumstances where we're seeing, inflation at these all-time high numbers and they don't seem to be slowing down, and we get super frustrated, and we're watching the Fed try to quell this. Well, don't forget, this is the same guy who said don't worry about inflation, it's transitory. That wasn't too long ago. And I don't know if you remember this, but I shared a story about my father teaching me to drive in an old 1971 Ford F-100 with a 3-speed stick shift on the column, and we lived out on the dirt roads out in the western suburbs back then. And, this was a long time ago because I'm an old man, but my dad was sitting next to me with a Doral cigarette hanging out of his mouth and a Budweiser in between his legs, teaching me to drive. And I turned that corner and I got scared and I whipped the steering wheel back the other way. Well, I overcorrected and the truck fishtailing. Well, all I was doing was overcorrecting left, overcorrecting right, and I'm fishtailing down the road. And as you remember from the story I shared, my dad reached over and he grabbed the steering wheel. And I thought, oh, my God, this is not going to be good for me. And I looked over and his beer was still in his lap and the cigarette was still hanging out of his mouth with that long ash on it. So I knew I wasn't in for a whooping. But he shared with me at that moment that overcorrecting can be as dangerous as not correcting at all. And that's the fear that we have with the Federal Reserve right now. They waited so long to start moving because they were convinced rates were transitory, and that blows inflation rather is transitory, and that blows my mind because he was either wrong or he was lying, but either way it's unacceptable. That being said, there's a fear now in the market that he's overcorrecting, so everybody's looking ahead to Q4 and then Q1 into next year. But Kai, great question. As you can tell, I love geeking out on the economics of mortgage and real estate. But you hear the music. Dom's jumping up and down back there telling me we got to go into a break. So that's my cue. We'll be back into Sit Tight for 2 minutes. On the other side of this break is more of the Mr. Mortgage Show.
New to to South Florida and ready to sit down roots with a new home? Willow Title Services makes closing a smooth, painless, and positive experience. With individual service for each buyer's needs, Willow Title Services has a combined 50 years plus of experience with industry-leading closing techniques. Call Willow Title Services today at 561-737-1630. That's 561-737-1630. Online at willowtitleservices.com. Willow Title Services is rooted in experience to help you get to closing.
Here's another 5-star review.
As a realtor, I have a bunch of mortgage brokers to choose from, but I prefer to work with Mark and his Mr. Mortgage team. In this crazy market, there is no room for error, especially on the mortgage side. Mark's team moves fast, keeps everybody in the loop, and makes things happen. They always give my clients a great deal and take the time to walk them through every step of the process. When you're considering a lender, I encourage you to talk to Mark Eitel and the Mr. Mortgage team.
Hey, it's Mark Eitel, host of the Mr. Mortgage Show. You hear me all the time talking about the need to have the very best team representing you in a real estate transaction. And that starts with a really great agent. If you've got a great agent, that's awesome. But if you don't, check out www.reallyGreatAgents.com. There you'll find the best of the best, regardless of the city they work in or the brokerage they work for. www.reallyGreatAgents.com. www.reallyGreatAgents.com.
Are inflation and everyday expenses eating into your retirement income? Maybe you've considered a reverse mortgage and have unanswered questions like, do I still own my property? Can the bank kick me out? What happens when I die? Can I still leave my house to my kids? These are all great questions. Visit www.moreaboutreverse.com to learn more. That's www.moreaboutreverse.com. www.moreaboutreverse.com.
Welcome back to the Mr. Mortgage Show. Call us now at 855-462-7292.
All right, we are back. My name is Mark Eitel, and you are tuned in to the Mr. Mortgage Show. Just pull that knob right off the dial. This is where you want to be. We've got the inside information that you need to go out there and just kind of figure out this maze of real estate and mortgage news that's swirling around out there. So the sky is falling. The sky is falling. Guys, the sky's not falling. We're seeing wins every week. We were talking a little bit ago about using an equity line to pull some of that equity out for home improvements, for debt reduction, whatever the case may be. And I just want to share a win from a couple weeks ago. I haven't told this story yet, but I've got a friend who is also a client. And over the years, we've done a ton of business together. I've helped him with many, many mortgages over the years. And he bought a property out in Okeechobee, super cool property. It's on a, I don't know what you would call it, but they have a hunting area. They've got their own, what do you call it, landing strip for the small planes. God, I can't believe I couldn't figure that out. They've got a runway. That's what I'm looking for. But it's just a super cool fly in, fly out hunting lease right there on the property. It's a sportsman's neighborhood, if you will. And super cool guy. They were talking about putting solar panels on the property out there. So we all have that fantasy about, being off grid if we have to. And he's doing it. This is a really, really cool place. Long story short, he was presented the solar panel package for his property out there. And this is a super smart guy. He read through the financing options and realized very, very quickly that while the interest rate in the package was super enticing, it was loaded with front fees. So it was not a smart move. Anyway, long story short, he tapped an equity line and is building putting the solar panels on there and just creating this amazing family compound that they can go out and take advantage of on holidays and weekends. So super cool guy, super cool story. And he used exactly the strategy we opened the show with regarding the first question regarding the equity line to grab some access to capital. So I wanted to share that just because out there every day we're seeing people win. We're buying rates down with seller contributions. We're using, different strategies to make it work. So if you have questions about any of that, give us a call, 855-462-7292. And I know we've got some questions lined up over there, so I'm going to throw it over to Dom and see if we can't get through some of those questions.
Connor sent an email. I keep hearing the housing market is cooling off and prices are coming down, but I'm not seeing it. All the houses I look at are still pretty expensive.
Hey, Connor, I feel for you, brother. That's the reality of it, right? I'm seeing the same headlines, and you hear me dissect them every week, and we poke holes in them. And CNBC is guilty of it all the time. You see a headline that says housing sales cool, but then if you read the headline, it's that they're talking about the sales volume. And if you see prices fall, they're talking about price increase or month over month, a fraction of a percentage point in reduction. What you need to look at is year over year appreciation is still in the double digits. Now it's cooling, no question it's cooling. And you've heard me say, if you've listened to the show for any amount of time, I've been saying it for years, healthy appreciation in my eyes is single digit. So I do believe we're on track to that. And I think somewhere around, 5 to 9% appreciation is where we need to be to sustain a long-term growth cycle in housing. So I get it. It's frustrating. You read the headline and then you pop open Zillow or Realtor.com or Redfin or whoever, and you start looking at prices and you're not seeing all of this discount that the headline is talking about. Year over year, the housing is still more expensive. So I feel for you. Keep looking. There's opportunity out there. The cool thing is that sellers, as I've mentioned, are more willing to negotiate again, and there might be an opportunity for a buy-down strategy. And if you want to talk that through so you're armed and prepared for negotiation, give us a call during the week. And hey, while we're talking about that, I'm just going to touch on that for a minute because, during the pandemic, everybody was conditioned to be completely approved, not pre-qualified, but pre-approved. And some people even fully through underwriting, so all we had to do was plug a property in. Well, don't lose focus of that because that's still the most powerful negotiating tactic you have is to show that you are ready, able, and willing right now to make that offer. Because if you go out there and you see a property on Saturday or Sunday, and then you're calling your bank or your mortgage guy or hopefully me on Monday, you've already missed 2 days of opportunity by the time somebody digs into your approval. And sellers are still not accepting offers without approvals. And it's prudent. It's prudent to do that. You would not climb all the way up in a tree stand and wait for a deer to come out in the clearing and then run all the way back down across the field to your truck to find your gun. If you're going to hunt, you're going to be ready to pull the trigger when you see the game. Same thing with fishing. We live in paradise. You're not going to go out there and run up and down the coast and find weed lines and then run all the way back to the dock to get your tackle and your rods and hope that the weed lines are still there and somebody's not already on them. And lastly, this one's for the ladies, and I know I'm going to get some hate because I'm going to be accused of mansplaining, but there's not a lady listening who doesn't have her credit card already in her purse before she walks into that shoe department in Nordstrom. You are ready to pounce on any deal that is, those Louboutins that are marked down are coming home with you because you've got your credit card in your purse. Shopping for a house should be no different. You should be armed and ready to make that offer. So anyway, I appreciate that. I'm going to throw it over to Dom so we can keep moving through your questions.
Here's a question from Bruce. I'm looking at an office building. It's fully leased and is generating decent income. Will the landlord loan work for something like this?
Hey, Bruce, that is a great question. No, the landlord loan that we talk about is designed for rental property, residential income producing property. And there are landlord loan products for multifamily up to 8 properties, but it's residential. It's where people sleep at night. The cool thing, though, you're asking about an office building. There's some pretty aggressive commercial mortgage programs out there right now, and we've got our hands in a few of them that I'm super excited about. We're seeing rates in the 5s to mid 6s, and yes, I said 5s. They're lower than residential rates at the moment. 20 to 25-year terms, 5-year fixed periods with down payments as little as 15 or 20%. So there's that. You've now opened up Pandora's box and you're talking about a quote unquote commercial loan. The good news is a lot of the weight of the underwriting decision is still based on the income of the property. So from that aspect, it operates very similarly to a landlord loan, but it's a fully underwritten commercial mortgage. So great question. And landlord loan is for residential property. And then what you're talking about is going to fall into the commercial category. And we don't talk that much about commercial. Most of our questions are around residential lending. But man, in my career, we've done a lot of it. We've done builder's line of credit, SBA acquisitions, SBA development, and now these straight commercial purchases. So thank you for that, Bruce. That's a wonderful question. If anybody needs more information about it, just give us a shout. Hey, Dom, what else do we have?
Laura is asking, my Credit Karma score is 593. Is there a first-time buyer program that I might qualify for?
Hey, Laura, that is a great question. First, Credit Karma. Often your Credit Karma score is going to be a little bit higher than your mortgage score. We've talked about it in the past. There are different factors that are scrutinized on the mortgage side, and it usually is a little bit of a lower score. But to answer your question, there are loan products out there. And we've done FHA mortgages with borrowers all the way down to 560. And I know technically it can be done down to 500. But, the Credit Karma thing is good because it gives you an idea, as we talked about, which way. Think about it like the tide, right? So you're seeing your Credit Karma score go up. You know which direction the tide is moving. It's going up, it's going down. But a mortgage inquiry and a full review of your credit by a lender will tell you exactly how deep the water is, what the temperature is. But the Credit Karma is a good place to start. So to answer your question, there are programs for scores in the high 500s. I would love an opportunity to do a proper credit review for you. We can do what's called a soft pull, so it doesn't affect your score, but it still gives us access to all the data that we need to properly evaluate. And then one other cool thing a lot of people are unaware of is most lenders, and we do this all the time, but most lenders have access to what's called a score simulator. So I can put your credit review package into the simulator and say, okay, if you were to pay down your Rooms To Go card by $200 or knock $500 off your Visa or $250 off your Sears card, if Sears even offers a card anymore. But my point is we can pull the levers and twist the dials and tell you with some pretty simple strategies how you can get your score up. So fantastic question. I encourage everybody to take a look at your score and figure out what you need to do to be mortgage ready. But thank you for that question. You hear the music, you know what that is. That's my cue. We'll be back in two. Sit tight for 2 short minutes.
Buying a home can be stressful. Willow Title Services will help you close the deal. Offering tailored services for your unique home buying needs, you'll have a single team member guide you from day one to the day you get your keys. They have a combined 50 years of experience, so trust the closing experts and contact them today. Visit WillowTitleServices.com. That's WillowTitleServices.com. Willow Title Services is rooted in experience to help you get to closing.
Here's another 5-star review.
We kept our business above water with credit cards during the pandemic. I'm glad we did. Business is better than ever. But I didn't want to be a slave to those credit card payments. I called Mark about the rec loan he advertises. Long story short, we did a rec refinance and paid off everything, even the car. Now we only have the mortgage payment. We're saving a bunch every month. Yes, we are happy to recommend Mark and the Mr. Mortgage team.
Are inflation and everyday expenses eating into your retirement income? Maybe you've considered a reverse mortgage and have unanswered questions like, do I still own my property? Can the bank kick me out? What happens when I die? Can I still leave my house to my kids? These are all great questions. Visit www.moreaboutreverse.com to learn more. That's www.moreaboutreverse.com. www.moreaboutreverse.com.
Welcome back to the Mr. Mortgage Show. Call us now at 855-462-7292.
All right, we are back. My name is Mark Eitel, and you are tuned in to the Mr. Mortgage Show. And Dom and I do this every week right here, same time, same station. And thank you so much for your questions. We're going to try to get some more questions in. Let me throw it over to Dom and see what he's got over there.
Michaela sent the text. I've been trying to save up for a 20% down payment, but it's tough with prices and interest rates going up. What's the downside of putting less down? I know I need mortgage insurance.
Hey, Michaela, that is a fantastic question. So I know there are a lot of financial gurus out there advocating for a 20% down payment, and it makes sense. I mean, a 15-year mortgage with a 20% down payment, That's Dave Ramsey's way to homeownership. And I'm not discounting the value and all of that. But here's the thing, right? If you're paying rent right now, unless you're living in your mom's basement, that strategy is a challenge in this market environment. So imagine if you would have put 5% down 2 years ago, where you would be right now in equity. That the downside is the mortgage insurance. The downside, if you will, from the strategies that we talked about with the most conservative financial strategies out there, is that you'll pay more interest over time. That's a downside. The challenge with the 20% strategy is while everything is more expensive, it's harder to save. While rental rates are jumping, it's more expensive to live, which is making it harder to save. And with all of the appreciation that we've seen in the last 2 years, my God, you would have been so much better off if you were able to buy. So the downside to the less than 20% is the mortgage insurance. And the mortgage insurance can be dropped once your balance is 78% or less of the purchase or the value of the property if you have a conventional loan. If you get an FHA loan, the only way to get rid of the mortgage insurance is to refinance. So in my mind, jumping in sooner rather than later and capitalizing on that equity build is the way to go, especially if the mortgage payment is the same or less than your current rent payment because you're already paying to live. So if you wait till you pay everything off, you've wasted how much money in rent over the years. So great question. I'd love to deep dive that one with you if you're open to a conversation. Call me off the air, 855-462-7292. Man, we've had some really good questions over there this week. I mean, Dom's been jumping and making things happen, and he's jumping like House of Pain, right? What's that House of Pain song? Jump around, jump. Remember that? Dom doesn't remember any of them. Oh, there he goes. He remembers. All my musical references are old ones. But anyway, thank you for everybody's questions. I mean, we've had some good ones. Tammy jumped in with the home equity line to pay off debt. I know Leanne was talking about waiting to buy, and now she's stuck. And we just kind of talked about that with Michaela right there. So there's a lot of frustration in the market for the people that waited. Jeremy was kind enough to call on his parents' behalf about a reverse mortgage, and I can't wait to talk to you about that, Jeremy. I know we're going to send you back an email and get that conversation started. And then Kai got me off on the deep end with financial talk because supply and demand is the only thing that controls pricing, and the Fed is trying to slow demand down by making it so ungodly expensive to borrow money that we're going to stop doing it. So anyway, you guys have been amazing. You never disappoint. You always bring the great questions when we're sitting here doing the show. When we're not here, that number that we give out, the 855-462-7292, that rings in my office during the week. So we call that the Anytime Hotline because it rings to me anytime, here in the studio when we're on the air or at the office during the week. 855-462-7292. Hey, guys, but I'm going to ask you a favor. I do it every week. You hear me do it. If the show resonates with you, if you think there's some good stuff here that somebody could benefit from, I'm hoping I can count on you to share the show. If you've got any friends or family or coworkers, or heck, the guy in front of you at Publix, if somebody's out there murmuring about real estate or you hear that they have questions, is it a good time to buy? Is it a good time to sell? Should I refi? How can I get the best rate? Share the show with them. I'd love to answer their questions. They can find more information about us at Mr.Mortgage. Just go up to your browser and in the address bar type in Mr. and then mortgage. No .com. We pop up. You can find all the back episodes if you want to share the show with them at MrMortgageRadio.com. Or, as I mentioned, 855-462-7292 is the best way to get us during the week. But, hey, you hear the music. You know what that means. We are wrapping up another week. Man, the time is flying. We have so much fun with you, waxing philosophical about real estate and mortgages. If you like what you heard, come back next week right here, same time, same station. Dom and I will be here for more of the Mortgage Madness. Have a great week, everybody.
That's a wrap. Join Mark Eitel next week for more thrilling, edge-of-your-seat discussions about real estate and mortgages right here on The Mr. Mortgage Show.